Well, the cost of fuel has been making news all around the world for weeks now as petrol and diesel prices hit multi-year highs amid tight supply. And in response, a number of oil-consuming nations have decided last week to release oil from their strategic petroleum reserves in order to lower the high gasoline prices. South Korea, the United States, United Kingdom, India and Japan are among these countries. But the question is, will the move be effective? For this, we are joined by Melvin Matthews, advisor to Orbit MI, and Jeffrey Halley, senior market analyst for the Asia-Pacific region for Oanda, who is based in Jakarta. Very warm welcome to you both. And, well, we've got a lot of questions today, and let's start with you, Melvin. Now, first of all, why have consumers been seeing this significant rise in retail petrol and diesel prices?
Good morning, Sooyoung. To understand the significant rise of petrol and diesel, we have to first understand how crude oil has performed since the pandemic. Early travel restrictions due to COVID-19 brought to a standstill almost all modes of transportation, with flights grounded and people not traveling to work. The consumption of petrol and diesel has drastically reduced. This has perhaps been the main reason that the WTI crude oil prices went into negative territory in April 2020. Now, the global crude oil prices have been increasing after the Organization of Petroleum Exporting Countries, or OPEC Plus, has decided to continue supply curbs. And around this time last year, the crude oil prices were around $45 a barrel. And since then, it's been steadily rising to over $65 a barrel in March this year, and followed by $75 a barrel in July this year. And the latest earlier this month in November, about $85 a barrel. Since then, crude oil prices have tapered off to trade at just below $70 a barrel. This naturally has had a knock-on effect on higher retail and petrol, diesel prices at fuel pumps and gas stations.
The White House has said that anticipation of the reserve tapping move has already helped bring down oil prices about 10% during the past few weeks. Would you agree with that? Do you think this SPR release is going to bring down the retail pump prices down in the short run?
I think the sentiment is more driven by Omicron and how that's going to pan out. Are there going to be lockdowns and quarantines and travel restrictions? I think the SPR is more of a political signaling to the OPEC Plus, and will have, if at all any impact, it'll be very, very short term.
Well, it seems that this political signalling is quite important, especially in geopolitics. And, well, South Korea and Japan, they're among the countries that are joining the US in releasing oil from strategic reserves. What's the significance of this coordinated SPR release between multiple countries? And Melvin, how do you see this? What kind of decision do you think OPEC Plus is going to make in their meeting this week when it happens? And how's that going to affect global consumers?
Well, OPEC has not made much money during the pandemic because the fuel prices were really low. But at the moment, the situation is quite dynamic. And for any analyst to make any reasonable forecast is not easy. I believe the OPEC might take a wait-and-watch approach to monitor the impact of the SPR release, because we must remember that the total strategic reserves of the OECD countries is about 1.5 billion barrels. And I don't believe that they're going to release all of that. But I do know that there were reserves that were put in place when the prices were low. But I think the major impact that they're going to be watching out for over the next few weeks, at least, is how Omicron is going to pan out and what sort of restrictions will be put in place based on that, because then that will impact how global trade and transportation will be affected.
And indeed, well, global oil prices did fall on Friday due to concerns over the new variant. And, well, Melvin, do you think that we're going to continue to see a downward trend in oil prices?
Well, I wish I had a crystal ball, but I think this is a difficult thing to predict. But I think in general, winter months see a spike in rates. But as winter eases off, there will be lowering rates, is my expectation.
Finally, before you go, Jeffrey, now for the Asia-Pacific region, where many countries are very trade dependent, how do you forecast recovery in this area? I mean, especially with this new variant, prompting fears in the region?
Well, much of Southeast Asia is still emerging, so they've been lagging Europe, they've been lagging China, they've been lagging North America in the recovery, mostly because of their very low or slow start to vaccination. So domestic demand is quite fragile in most of Asia at the moment. A new COVID wave leading to these global shutdowns and impacting global trade would be quite a strong headwind for Asian markets into the first quarter of next year. But again, we need to see how this evolves in order to make that call conclusively.
Well, I'm afraid we'll have to end the discussion here today. That was Melvin Matthews, advisor to Orbit MI, and Jeffrey Halley, senior market analyst for the Asia Pacific for Armando, who is based in Jakarta. Thank you both so much for your time today.
Thank you, Sooyoung.